So once again, good evening to everyone. This is our usual Saturday session, and the first few minutes we're going to talk about the index, Nifty, Bank Nifty, and the sectoral indices. Then later on we'll move on, update the open positions, the trades that we had identified last week. We would scan the markets and look for opportunities both from the daily as well as the weekly time frame for the week ahead. So let's get going. I have purposely kept an extra time frame on my screen: the monthly, the weekly, the daily, and the 125-minute time frame. Monthly, of course, from the point of view that we have had an end of a month, and it was a phenomenal month, quarter, in fact year. Let's restrict today's discussion primarily from the monthly, weekly point of view, and that's why I have added monthly, 125, and got all the spectrum of different time frames. Nifty monthly, what can we say? Closed at the highest point of the month, an all-time high. It bounced back well from the weekly time frame, from the lows of close to 18,800, when there was a little bit of doubt that what's happening. This was towards the end of October, and since then the momentum took the market to an all-time high in style, and has closed also very well in style right at the highest point. Trend positive, momentum positive, no signs of divergences or slowdown on any time frame, on the monthly time frame. Range indicators suggesting the fact that it's a little stretched, but we are in a very strong bull market. Weekly time frame, though we've been counting weeks, and third, fourth, fifth, sixth, seventh, maybe eighth consecutive positive week so far. Stretched, yes, we had some range expansions recently, but both the trend, the momentum are all intact. Like in the monthly time frame, there is particularly no signs of concern right now over here. So there is no particular reason for anyone to go bearish from the weekly time frame. Expect the trend to continue. Yes, one can expect some momentum slowdown, but the market is not in any kind of move to come down. Now let's come to the daily time frame, and this is where we do have some red color Heiken ashy candles recently. We continue to observe a structural divergence shaping up with our momentum indicator. Please understand, and I'll repeat this over and over again in our live sessions, that divergences of any nature, structural slant divergence of any nature, is not not a sign of reversal. It is a sign of slowdown. When we get these kind of readings, it's a sign of probabilistic slowdown. In a bull market, there is no mood to even slow down. So when I see these kind of formations on the chart, what it tells me is, do not go too aggressive on the long side. Yes, the index can rally, stock specific, sectoral specific movements do happen, but you need to be a little extra careful because this is exactly where the breakouts tend to fail. But the breakouts have not failed so far in the market. In whatever little breakouts we have seen recently, they've all held well. So from a short-term point of view, from the daily point of view, yes, there is some signs of a structural positional divergence. Is this divergence confirmed? If I ask myself, the answer is no, it's not confirmed yet. Then I will ask the next question: what will I see on the charts later on coming week, which will confirm that yes, it can reverse or slow down? At least I look at Heiken ashy candles, and what I would like to see is at least a Heiken ashy which offers me a lower shadow. The emergence of a lower shadow will tell me that prices have corrected a little bit. And if that little bit correction has some meaning to it, then the low of that lower shadow should get broken. So in short, we need to see a lower shadow on the Heiken. Next, we need to see a break and close below that lower shadow of Heiken ashy. And then only we can say that, okay, this structural divergence seems to have completed and we can expect some follow through weakness. Is it there? No. Will it happen immediately? We don't know. So as because there is not enough evidence to go short or bearish, you should not. You should hold on to the trend. Trend is your best friend. And so there is enough bullishness on the daily time frame as well. So across all the three time frames, monthly, weekly, daily, it's positive. I'm not going deeper into the 125-minute time frame because I can see clearly a breakout which is likely to slow down now. But it's a bullish market. View should be bullish. Strategy should be cautiously bullish. You should not go gung-ho, aggressive bullish, left, right, center. You should be cautiously bullish. Should you go bearish? No. Should you go contrarian bearish, looking to sell, let's say any sector or any stock which is making some kind of a topping out pattern? Possible. Gutsy, it will be riskier, but the markets going forward for the next, I think, 1 to 2 weeks will give you contrarian shorting opportunities, that's for sure. And it might give you pullback shorting opportunities also. I'll rather prefer the pullback ones, but it's a strong bull market as of now. Stretched, and this stretched behavior makes it difficult for any short-term trader because your stop loss will generally be wider. Let's take a look at the broader markets, the CNX 500 across the three different time frames. Pretty, just like the Nifty, fairly well poised, just like the Nifty index. And over here also you would notice the structural divergence which I shared with you in the Nifty chart. Again, over here, the indicators are indicating of a probabilistic slowdown. This probabilistic slowdown indication from here needs to get confirmed from the behavior of price up there, which means that price needs to come down. It's not coming down. So divergences form, divergences also dissolve. So as of now, CNX 500, the broader markets, Nifty mid cap and small cap, most of them are holding exceptionally well. This is the CNX mid cap. Beautiful, no problem. No problem. And similar kind of a feeling you will get from the mid cap index. And then finally the CNX small cap index, also very, very strong looking monthly, weekly and similar daily time frame. So the benchmark Nifty followed by the 500 mid cap and the small cap, they all look beautifully strong on the monthly, weekly charts. They all have a probabilistic negative positional divergence on the daily time frame, but it's no way close to being confirmed. So view remains the same across the broader markets as well. Bank Nifty and CNX Finance, an important pocket, and this is where we see that the monthly time frame has given us what we can call as a breakout. It's a breakout. You can see that 46,000 level breakout that we have seen for the Bank Nifty. Is it going to be a successful breakout? As of now, looking at the weekly chart, it is sustaining well. My experience with breakout failures are, if breakouts have to fail, they fail immediately. They do not do too much time pass. So if the month of December we had a great breakout, then by Jan it will slip below 46,000. If it slips below 46k in Jan, it means that this was a breakout failure. Are we there? No, of course not. Weekly charts fairly strong. Come to the daily, we saw some divergences, structural possibility and all those on the Nifty and the broader markets. Well, the Bank Nifty seems to be giving us a little bit more cues than what the Nifty and the broader markets were giving us. Zooming into the Bank Nifty daily charts, I'm talking about this particular chart, this particular time frame. And if you help me, I can zoom in and take a look at this particular area, wherein we do see prices going up and trading on higher high and the structural positional divergence shaping up on our momentum indicator down here. So there is this formation like we saw in the Nifty and the broader markets, but the good thing about this Bank Nifty chart is this. See, I did tell you some time back that at least we need to see a Heikin Ashi which offers me a lower shadow. Bank Nifty is offering us a lower shadow. Then what we should see is at least the break below that lower shadow, and if it closes below it, then we can say that okay, there is some possibility. Did it happen recently? Well, it did happen recently. It was a very shallow 1-2 day fall and a sharp bounce back. Did it happen before that? It did happen somewhere here, but it did not lead to any fall. Did it happen before that? Over here, did it lead to a fall? No. So if I consider this pocket of opportunity of some kind of a correction, the similar pocket of opportunity did shape up thrice in the recent past. Okay. The first one never came down, there was no divergence. The second one, which actually never came down, was also there was no divergence. The third one, which was this one, did have some kind of a divergence. And well, it's not enough, but come on, from this low to this low, it was a decent short-term correction. The recent one, I'm talking about this one. So you cannot ignore that this was not a correction. And now we have the fourth opportunity. So having looked at this formation on the Bank Nifty chart, if we see on Monday Bank Nifty falling below the Friday's low and maybe closing below this, then I would rather say that this divergence is confirmed and we might see some downside. Of course, the index will have to deal with very good supports from good looking resistances of 48,000. So 48,000 will definitely be a key. So Bank Nifty may be a possible pocket of weakness if Friday's low is broken. Same story with the CNX Finance. You will not see much of a difference. So banking and non-banking counters, keep an eye on slip below Friday's low and did it close below Friday's low. So banking and financials. Auto. Well, auto I was expecting, looking at the CNX auto ratio chart, if you remember, recently I had shared a post that the CNX auto vis-a-vis CNX 500 is down than in comparison to CNX auto, and so if the market overall corrects, then keep an eye on this pocket. But sadly, the CNX auto index, if you take a look at it, did come down but equally bounced back with equal kind of a momentum. Do we have any kind of a structural positional situation forming? Possible. Is it a good looking divergence? No, it's not. This kind of a rally, this kind of a bounce back, 80 degree, 75, 80 degree kind of a rally is exceptionally strong. Monthly, all time high, very strong. Weekly, all time high, pretty strong. Daily, Bank Nifty at least offered us something. There's nothing on the order. Bullish, strong, stretched. We need to wait for the momentum to slow down. Until and unless that happens, it's very difficult. Should you chase on the long side? I would definitely not suggest. I'm more of a buyer which will wait for a short-term correction and then will find relatively better price. So I will not suggest you to chase. CNX Auto, view bullish, stay away because it's extremely stretched. Consumer durables, I think, has significant upsides considering the way the monthly charts have given a structural multi-year breakout. These kind of structures are very, very potent. We can expect some serious upsides. 29,000 should hold for the Nifty consumer durables. Weekly chart is strong. Daily chart is pretty strong. Do you have any kind of a structural positional divergence kind of a reading over here? Maybe looks like that, but same story. It looks like that. It's not confirmed. Wait for some red icons, lower shadows getting broken, etc. No reason to go for any kind of bearishness on consumer durables. Energy, what can we say? Phenomenal breakout on the monthly charts. Exceptional pullback on the weekly time frame. Daily, is it forming some kind of a rising wedge in a rising market kind of a formation? Is it shaping up like a rising channel? Consolidation in a rising formation? This is a rising formation in a rising market with falling momentum. Now, don't get me wrong here, but when we get these kind of readings, they are generally signs of slowdown. They're generally signs that whenever it's breaking out, it's failing, it's breaking out, it should fail. This is what these readings tell us for the CNX energy? Based on the readings, we cannot act. The readings give us a hint. The action needs to come from price. So let's come to the price. Now you will definitely point it out to me that, listen, take a look at the CNX energy daily chart. You've got a red Heiken-Ashi. It's got a lower shadow. You might get excited. Let it fall below the low of this Heiken-Ashi and we can go short and all that. Possibility. It's not a confirmed table thumping setup that we should be very excited about. But is there some possibility of some weakness? Yes. The last time it created a huge range, this one, and it didn't come down much at all. In fact, it did not close below the low. It just slipped and it closed up here. Right? So what we would like to see is closing below that low. Is it a possibility from CNX energy? It is. So keep in mind Bank Nifty and CNX energy. If your thought process is tending towards from where can the weakness come? As of now, we have identified two such sectors. Possible two such sectors. FMCG, no. In the sense that strong uptrend across all time frames, strong momentum across all time frames, closing right at the highest point of the day. Hindustan Unilever, ITC and the others, McDowell's and everyone else just picked up exceptional momentum recently. Nothing. Stay in the game and just ride the trend. IT is slowing down. Good looking monthly chart, turning around, a little far off from its all-time high. This is one sectoral index which is not at its all-time high. Weekly, nice, no problem. Daily, wait a minute. Again, I would like to take your, bring your attention to this area wherein we do see some kind of a structural behavior and the momentum is turning down. Now, I have a double divergence kind of a situation here wherein I have a slant divergence. I do have a positional divergence. Both of them have combined at this zone. Not bad for any kind of a chart to top out. Do they always top out? Of course not. But same logic. Do you have a icon? Yes, I have. It's got a lower shadow. If it falls below that, if it stays below that, the possibility of this or this opens up. Time will only tell us, price will only tell us whether that will happen or not. But add IT to the list with financial services, Bank Nifty and energy. These charts on the daily time frame are offering some possibility of weakness. Probabilistic, short-term weakness to be precise, because the market is in such a strong bull grip that the word weakness, the word slowdown, the word correction is so trivial, it's so small, it's just meaningless that you can just slough it out and it doesn't matter, something like that. So we can expect some bit of a slowdown from IT consumer durables, IT energy and the financials. Coming to metal, the third last sector in our list, good, strong monthly breakout. Do remember that in the past, every time there has been a monthly breakout, failed. And we have discussed this in our Saturday session multiple times. We have this one, another breakout. This is a really strong breakout, closing right at the highest point of the month, of the week, also almost at the highest point of Friday's daily range. Monthly strong, weekly strong, daily is also strong, no such signs, so don't get bothered. Is it stretched? Yes. It's stretched here, it was stretched here, it was stretched here also, and it keeps on stretching. That's the sign of a strong trending market. So metals, stay bullish, cautiously bullish should be the right word. Then pharma, same thing. After a bit of choppiness, volatility in this area, picked up to a new high. Highs have been taken care of. Successful breakout, all-time highs. No problem. There is no particular reason on this chart to feel any kind of contrarian behavior. So pharma, strongly positive. And the final sector, realty. What do you see? Well, you see very similar kind of readings which you saw in Nifty, which you saw in CNX 500 mid cap, which you will see that the monthly and the weekly are very strong, no problem whatsoever. Is the daily which has created some kind of a structural positional divergence. Again, divergences are not signs of reversal. It is the red hike and the lower shadow, the fall of that, the follow through move, which creates such a tendency. So you can keep an eye on that, but it's not as ready as the Bank Nifty, the CNX Finance, the CNX Energy, and the CNX IT. So these are the 4 indices you can keep on your watch list for any kind of contrarian probabilistic slowdown. If you are long on these particular themes, you should look to trail your stop losses, protect your open profits, maybe book out partial profits. It's not a bad market to book some profits off the table. Anyone is extremely bullish about the market, right? So it's not a bad idea to be a little careful. I'm not saying have a reverse psychology, have a opposite approach, look for shorts. I'm not suggesting to go bearish, but the sentiment seems to be pretty strong, and so it makes sense to be a little careful and cautious with your long positions, right? Okay, so that was our take on the market and the sectors. Now let's I can see that there are a few questions being posted about some stocks, so let's straight away go to the stocks and find for trading opportunities next week.